From forecasting the technology bubble to calling the housing crisis to warning about trouble at some of the nation's largest financial institutions, Eric Sprott has been well ahead of the curve with the calls he's made. In the year 2000, he began warning about a long-term secular bear market in stocks. He predicted a big run-up in the price of gold. Just take a look at how his hedge fund, the largest in Canada, has performed against the S&P, against oil and gold over the last 10 years. And you can see how his calls have paid off. He is here with me today. He's ringing the closing bell at the NYSE. He joins me in a First on CNBC exclusive interview. Eric Sprott, President, CEO, and Portfolio Manager with Sprott Asset Management. Eric, so nice to have you on the program.
Great to be here.
What wonderful insights you've had on this market, which is why I really want to start right where we are in terms of equities. I know we want to look at gold and commodities, but given the fact that this market is up as much as it is from the lows, and we're here in the middle of, earnings season,
right.
Do you buy into the rally that we've seen in equities?
Well, I haven't bought in, and obviously I've been wrong since March of 2009. I still have a deep concern about the leverage in the banking system, which I've expressed that view over the last decade. I look at the inability of governments who are spending vast amounts of money to generate much growth in GDP. In fact, there's been some excellent work done on how the marginal value of a government dollar spent is now negative. I could give you the example of running a $1.5 trillion deficit last year, and GDP goes up $200 billion. So we're not getting much bang for a buck, but we still owe the buck at the end of the year, as we will at the end of this year. So I very much worry about that. I also worry about what's going on in China. The Chinese government has asked the banks to cool down the lending. The latest data in March showed that lending's gone from $300 billion in the month to $100 billion.
Right.
And I just look at $200 billion less a month. That's $2.4 trillion a year less if it was to stay that way. And obviously it has to have an effect on their economy, as the lending of $2 trillion did positively last year.
Yeah, these are big numbers. So do you think that the idea that, China is rising so much and we've got all this demand, and that's really been riding this wave of making money in the commodity space and some of the producers, you think that should slowing down now?
Well, when you look back at China in 2009, they had a $4 trillion economy. They lent $2 trillion to people. They had a $600 billion stimulus. Well, $2 trillion lending and $600 billion of stimulus should generate some GDP growth. I'm not even convinced that 10% growth, which would be maybe $400 billion, is a very good response to all the measures that we're taking.
Really interesting. All right, let me ask you about the launch of the Sprott Physical Gold Trust. That's why you're here today, going public on the NYSE in February. Can you tell us about it? Tell me about this trust. You called it the Sprott Physical Gold Trust. Yeah.
Well, first of all, I should point out that, notwithstanding the fact that we're in the financial capital of the world here, Toronto is the capital for mine financing in the world. And in fact, some people think for resource financing in the world. And we've been a big part of it. And our view was that we could come up with a better vehicle than the Spider Gold Trust. And we think we have a much better vehicle than the Spider Gold Trust for a number of reasons. One, you can actually get physical gold with your units. You can't with the Spider Gold Trust.
Key point.
The tax rate on capital gains in our vehicle is 15%. In the Spider Gold Trust, it's 28% because the IRS considers it a collectible and therefore taxes it differently.
You're kidding me. Oh, I did not realize that. This is important.
And the third major difference is the counterparty to owners is the Royal Canadian Mint, where we store the gold, and I would assure all your listeners that every bar is there. Is not a leveraged financial institution. It's a part of the government of Canada, and the risk of that institution not having the gold is remote.
Yeah, but why would I want to put money into gold today, given that too has had a tremendous run-up?
Sure. Well, it's been the investment of the decade.
Yes, absolutely.
It has been the investment of the decade, hands down. Notwithstanding central banks selling it all decade long, which is doesn't sound like a very brilliant.
No, it's pretty. Yeah, absolutely.
But I would say that gold looks even better today than it's ever looked. We have sovereign risk on the economic map today that we didn't have on the economic map before. And as I look at the problems in Greece, and I see people taking $4 or $8 billion out of the banks because they're worried now about the government, so they're taking the money out of the banks, and maybe it'll move to the other pig countries, where do those people put that currency? And I think we can obviously see that lots of people are putting it into gold, including some of the smartest investors in the world these days.
And you've seen some of the smartest investors in the world put their money in mining-related activities, not necessarily just gold.
No.
So do you like other mining-related commodities? Tell me where else you see opportunity.
Well, we love silver, obviously, as kind of an offshoot to gold. In fact, I think silver will act better than gold. There's not as much silver inventory in the world as there is gold inventory. I have not been that big a proponent of the cyclical base metals, copper, nickel, zinc, things like that.
Copper has doubled.
It's probably tripled off the bottom or quadrupled off the bottom.
Tripled on the bottom, yep.
But I haven't been there because I worry that the economy, that the financial crisis that we went through, that we are supposedly out of, that we're probably not out of it. We've moved things from the private company space to the public company space by, governments taking over Fannies and Freddies and AIGs and whatever, and the Europeans bailing out the banks, the British bailing out their banks, and now, of course, the focus goes back to the governments. And we'll just see how long those governments, people will continue to buy their sovereign debt. And if they stop buying the sovereign debt, then the reason we're owning gold will just become more and more apparent.
So final question here. When you're looking at an overall portfolio, what should it look like? Majority in commodities?
Yeah.
I mean, you're looking for a long-term, secular, negative story for equities here. But what's going to be the catalyst? Because we're seeing this market climb, even though you've got fundamentals that are fragile in terms of the economy.
Well, of course, we run hedge funds, so we're kind of, you can be short and long at the same time. As long as your shorts are doing better than the longs are doing better than your shorts, you're okay.
Yeah.
And you were going to ask, like how deeply involved should you be in precious metals? I'm only going to give you my own experience, okay? We are 40% long precious metals, and we're about another 35% long precious metal stocks. Okay. 20% in oil and gas, and the rest miscellaneous. So we're essentially all in. We probably have the most levered position to those products that you could possibly imagine. And
you don't see a catalyst. I mean, what's the catalyst to move stocks lower? I mean, I know you're looking for this market to crack, but...
Well, I think if a problem of slowing in China happened, and the Chinese market peaked out in August of last year.
Yeah.
Hasn't gone anywhere. Their market doesn't look like it's buying into the Chinese experience as much as we're buying into the Chinese experience.
And of course, you've got the Greek issue. Right. Eric, we so appreciate you joining us today.
Maria.
Thank you so much. The pleasure is ours. Eric Sprott's closed-end fund, Physical Gold Trust, trades on the NYSE under the symbol PHYS.